We'll get this rolling. This is the Nesby Entrepreneurship SIG Stock Talk. So what's going on, Kyle? What's going on, Sherman?
How y'all doing?
Hello.
Hey, there you go.
Let me see if it's better this way. I'm trying to find good light in here on me. But don't worry, I'll adjust that. I'll get there. But anyway, just wanted to talk about, the stock market, just what are some plays that you guys have. I know a lot of people are getting into that now. So, we're no experts, a disclaimer. We're just giving our friendly advice on things that we're tracking out there, just trying to create an open forum for conversation and knowledge. I know people ask me all the time about stocks. I'm sure if you guys are into stocks on here, people ask you as well. So just wanted to go for it. So I'll get it started. And like I mentioned, anybody that's in the chat, if you guys want to go next, or if you have a stock tip that you want to talk about, feel free and I'll tag you in. So for me, I was doing my research today, and one of the stocks that or just a sector that I've been looking at that obviously has been going, crazy right now is the biosciences, right? Biotech, biosciences is moving a lot right now. So for me, I saw today, actually, there are two companies that moved pretty well. Gilead Sciences, and their ticker name is GILD. And then also another one is Moderna, and they both are companies that are doing testing for, COVID. I believe Gilead jumped something crazy today, like it's after hours right now, it's at like 16%. And they are in the early phases of a vaccine for the COVID formula right now. So they're booming right now. And then Moderna, I think, is also in the early phases, or they were given like a $400 million grant for Corona. So, that's really big right now. So those are two stocks that I'm looking at right now. And the reason why is obviously clear. What's going on right now with Corona. Any company that can be first to the race or second to the race is definitely going to get a lot of business for those vaccines, just because of the worldwide pandemic. So Jay, what about you? I'll let you tag in next. No one else has mentioned anything on the so I'll tag you in.
Okay. Yeah. We got some. What I've been doing. Yeah, last time that we did the stock talk, I was mentioning two stocks that I've been investing in. One is called Canopy Growth. So I think it's called CGC. It's like one of the leading cannabis stocks in Canada right now. So I don't know if everybody knows, but it's officially legalized in Canada compared to the United States. So I've been definitely been in that sector for the past couple of years. That's more my go-to. And matter of fact, the crazy part about it is in the cannabis, they're struggling right now. So which is a good thing because they're cheap. So when last time that we did this talk, Canopy Growth, when they did the whole government shutdown, Canopy Growth was like $10, per stock. And now it's like around like $14. So that was like within a month, that's already like almost a 50% gain, So that's one. The other stock that I'm looking into is called CV Science. And so that stock is more talking about, as everybody knows, right now, CBD is legal, right? So in some states, form or another. And the problem with that is when it comes to cannabis, these big companies aren't able to start businesses and get funded through the banks, right? So when that happens, they can only use cash, and they have to be, creative in a way to, differentiate themselves. And so one of the ways is, as we all know, like with the research, cannabis can heal a lot of diseases. One is epilepsy, so that's one of the things that CV Science is working on, and it's pretty cheap, and it's a penny stock too, right? I think last I checked, it was trading for like 57 cents, but it's been as high as like $8, So there's a lot of potential right there to make some type of money. And so those are the two stocks that I've been trading recently. So, yeah.
Okay, sounds good. So you definitely are right in the cannabis lane right now. I know I've seen in the recent, weeks, we had to talk about some of the bigger companies are now having to downsize and kind of come at their approach differently.
Mm-hmm.
So it's still a good play, though. I mean, I think almost everywhere is a good play. As you learn more about stocks, whether you bet that they go up or you bet that they go down, there's ways to make money. Okay, Derek Mack, my brother, I'll call on you. I know we had a group chat and you sent a really good one earlier today. So why don't you bless us with some of your stock picks?
Yeah, so earlier today I was talking about, I was just matter of this happened yesterday. I was looking at a stock and look at CNBC channel, so that's what I started looking at stocks, looking at stuff to look at. And one thing that caught my attention was MGM. And MGM is one of big hotels that's around in Vegas that I've known for years. So that's one thing that came to my mind, and I noticed that MGM blew up from the last time I've been there like many times, and then to last year I found out that MGM runs like half of Las Vegas, including they got hotels out there in New Jersey. And then until I found out it was globally, I started thinking, okay, MGM's down to like right now by like $13 and a half dollars or $13.8, something like that. So I actually invest in them today, and I started looking into them because you figure by the time if this once this coronavirus thing ends, you figure people gonna be booking hotels, people gonna be traveling again, going to Vegas, wherever around the world, and MGM is like one of the big ones you should look into. And then adding on to Vegas, you notice that they now got a football team, and you figure since they got a football team with the Raiders and with UNLV, Raiders one of the biggest teams, famous teams out there in the west side, and you figure a lot of people gonna be traveling out there, and MGM, all their hotels is gonna be close by to that stadium. I don't know exactly how close they are, but they're one of the closest hotels to that stadium. I remember I just went there last year for my mom's birthday. Just check that out. So that's one I invested in. One other stocks I've been looking at is airlines. I looked at American Airlines, Delta Airlines, JetBlue, Southwest Airlines. Started looking at those. You notice how like a lot of those they've dropped dramatically, and like I said before, not many people traveling. There's been like a lot of travel, like limited travel and stuff like that. Like I could look outside my window, only airplanes you see flying in the air just FedEx or Southwest, and those are just like the very few flights that are allowed to travel. But other than that, those are things that caught my attention right there.
Okay. Yeah. And for those that don't know, if you're watching, you're streaming, you have JETS, JETS, which is another ETF fund, which basically holds some of I think it holds 7 or 9 of the top major traded airline stocks. I think right now it's at $15 price points, right? You may not be able to buy Amazon or Google outright, but you can go and invest in an ETF and there's basically equity traded funds, if I have that right. It's basically a collection of stocks, and these big groups will have a percentage of that stock, in their portfolio. So you kind of, secondhand investing in those stocks. So
can I ask you a question?
Yeah.
I'm new to trading. I'm trying to learn more. The idea of the ETF, is it just to aggregate different equities or different stocks together, or is there more to that type of asset or security? Because you mentioned JETS as a way to bundle things together. I was looking at this other ETF, Robo, for the robotics industry.
Oh, yeah, yeah.
It seems stable similarly, but I don't quite know what the ETF is trying to accomplish by grouping things together. So if you could speak on that, I think that'd be really informative.
Like I said, I'm no expert, right? We're all here just casual investors, but my knowledge, right, and the way I would look at or equate an ETF is almost like an investment group, right? So it's an investment group that invests in larger stock companies and hold, shares or have a percentage of those companies. So almost like a real estate investment fund where you can pay into, obviously the fund, and you get a percentage of that fund, obviously based on how much you invest. So it's an easy way to it's an easy way to quickly diversify your portfolio is another good way to look at something, right? If you're really more risk adverse, I would say an ETF. I think there's also mutual funds as well that are, as you guys sign up to your 401k, it's very similar to that, where your Vanguard, Fidelity, they sell you these portfolios that have, aggressive, intermediate, and moderate risk, and they have target goals by these years. I would say an ETF is very similar to that, but it's no target yearly goal. It's just obviously really an annual goal that they would want to attain, right? So I think that's a good way to see how different industries move over the years too, how the general industry grows over those years. But I would say the easiest thing is the quickest way and cheapest way to have a diversified portfolio in a certain industry. So as someone asked about any brokerage accounts on the Facebook Live, so one of the accounts, I swear by Robinhood. If you guys have any other suggestions, chime in. But Robinhood is really good. Are you still good? I know they're advancing. They're getting. I would say the user interface is really good. The referral program is really good, where you get a share of stock if you refer someone. I actually just got in onto the fractional shares program that they do. So now through Robinhood, you can buy fractional shares. I think somebody asked that question the other day, and another reason why I really like Robinhood. And I think they're starting to have a program where you can reinvest your dividends as well. So I feel like it's all in one shop. It's very easy to use from your phone. So I personally swear by Robinhood. But does anybody else have any other suggestions? Or
I was gonna say, I actually that's actually how I kind of got into stocks a little bit. That was the first app that I used, was Robinhood, and I have that the free share actually too. And I think I got like a free share of like Zynga or something like that, and just some random company, but it's actually gone up a lot. And that was one thing that I was like curious, or like just wanted to mention too. I think when Corona and all that stuff kind of started happening, I know everything tanked down. Like I remember specifically Tesla was at like 544 or something like that, like 544 per stock. And now Tesla's back at $775 right now. And I think they jumped back. It says within a week they had a really big sprout, and that sprout was from 644 to about right now it's currently at like 743, so almost $100 jump. And I think it was because they announced that they were going to start producing ventilators for like companies. So I think that's one thing I was looking at on Twitter. I kept seeing a whole bunch of notifications of Elon just saying, yeah, we're going to be providing a whole bunch of ventilators to different medical companies and stuff like that. So I think that's why like they're kind of going back up a little bit as well right now.
Okay.
I was gonna add to that, because somebody asked the question, what do you think about companies working on creating vaccines for COVID-19? These are some I'm currently looking into. So
okay, thanks for that. I'll get to that. So the other reason why I like Robinhood, or I would just give this general advice, right? I like Robinhood too because there's no fees, right? No fees on your trading. So I know other companies are starting to pick that up. You have E-Trade, you have I think TD Ameritrade has a platform. I think Zay said it was another one like Bullfrog, but the no fees thing is kind of important, right? Because here's my real life example. I started to realize when I was investing early on is you're getting charged like $4 to $5 a trade, right? So in a day, and depending on what type of stock you invest in, right now is a crazy time. Things are shifting, $10 a day, 20, depending on the stock. But traditionally, you're going to see gradual stock over like a longer period of time. So it may be a year before you even make $5 on a share of stock, right? So it'll take you a year just to even break even and then go from there. But with Robinhood, if you use a referral program, if someone hooks you up, you get a stock to start with, and then you can start maybe making trades. So it doesn't take as long to realize that return now. So that's why I really, I'd swear by Robinhood or any trade or brokerage where zero commission fees. Like I said, traditionally the market hasn't been this volatile where it swings so much. A lot of times you're going to invest in a stock, say like a Microsoft right now or a Zoom. You see it going up. Even those stocks, it's $145 to get in Microsoft or Zoom right now. On average, I think they're plus or minus, right? So that's a big upfront cost for one share, and then it may take you a year to get that $5 even. So if you go with a traditional trading platform, but obviously you can trade options and things like that where they give you where you can make a lot more money. But initially, a lot of us starting out, we're kind of feeling it around, and that $5 matters. And it can be discouraging because you may, feel like you made some money and then, you really didn't because you had to pay the fee up front.
Yeah. Can I bounce a little bit on that too? So I do a lot more options trading than regular stock. That's kind of what I've spent a lot of my time doing. And it's been about like 6 months since I've really looked into the market just because school and all. But for those of anyone who's like looking into options just as a preliminary thing, TD Ameritrade it's a pretty good platform, and they have
Thinkorswim.
Thinkorswim, exactly.
Yeah, I was gonna mention that one.
Yep, they have this thing called paper money for anyone who's trying to practice. So it gives you the real market and everything, but it gives you like fake investments. So any investment you make would be virtual, so it wouldn't be costing you anything, but you would see what kind of money you would have gotten, and you can kind of learn hands-on in options market without having to invest actual money. So that's been helpful. I've been using that for a while.
What was the name of that again? That website?
TD Ameritrade is the broker. It's called Thinkorswim.
Okay, cool.
And you're gonna want to look at paper money.
Yeah, Kyle. I just downloaded that about a week ago. That's the truth. Yeah, you're able to practice, and Thinkorswim is super robust. You do
absolutely
customize. Like you can have channels on the side of your graphs and charts to see what to get the latest news. It's so many things you can customize. It's intimidating opening it up initially, but once you get used to it and customize it the way you like it, you're good. And also, I wanted to throw in something I've been looking at is natural gas. Natural gas is down right now. I think it closed at $1.69 today.
Are you looking at LNG? Is that the ETF you're looking at for natural gas? Which or USG? I used to look at natural gas.
No, I think it's NG.
NG, okay, yeah, I knew it was something like that. Okay.
Yeah, I think it's NG, and just in December, it was like $2.20 something cent, $2.30 something cent. Now it's down to $1.60, and that, which is natural because everybody is not driving right now. So, but that's gonna go up, once everybody get back on the road.
Okay, appreciate that. Figs, you still there? I know you had a question or a comment.
No, yeah, it's Jack. I was about to chime in during the conversation, but I was planning to lurk. I'm still on the East Coast. I'm here in D.C., and so I told B I was gonna just hang low, but y'all got me excited a little bit about some of the conversation. So I thought I'd chime in. So I mean, I actually, so I've been with Fidelity for like the past almost 10 years now. Before that, I was with E-Trade, and then recently I picked up what were we just talking about? What's that app? Robinhood.
Yeah.
Because of the, just because of I heard all the talk and I wanted to see what it was about. And what I would say though is that it definitely, while I think that it's a good platform for folks who want to do options or want to get their feet wet. I would say that for those that are just getting started, it's probably best to use a platform that you actually have a bit of research, right? So I would say some of the things, I think TD Ameritrade might have some, or Jay knows I'm big on research and going through that. So it's probably good to go with some of the platforms that offer that in it, so that you don't have to feel like an expert when you're first getting started. I think that's important. That's just my thoughts.
Okay. Yeah, appreciate that. No,
yeah, sorry. And then and you guys are talking about some of the things you're picking up. I've been lately focused on for the most part dividend stocks. I've been doubling down on some dividend stocks already held, as well as just picking up some new ones. I saw I think AT&T hit a 5-year low, and I picked that up, and it's already in the green. I picked up I think it was something else that hit like a 10-year low, and I picked that up too. I can't remember exactly, but I've been really focusing on my dividend stocks lately, trying to get those up, as those will pay until the market kicks back, right? And so that's really been the focus for me. And then I've already held a few ETFs that were primarily in some REITs, and those are paying dividends as well. So I think that's a good play too. Don't sleep on the dividend paying stocks. I mean, there's fast money to make, but there's also some good slow money as well. That's just my thoughts. I go back on mute.
Okay, appreciate that, Jack. So just for clarification, REIT is a real estate is an investment trust. Is that what that stands for? It's basically real estate stocks, right? Like a kind of real estate investment group.
Correct.
Okay. Yeah. I know you've been dabbling. We were in another group chat, and tell me about a big play you just made. Run us through like a deal that you made and why you feel like it worked, right? For the day-to-day investor, just really break it down if you don't mind. Say, hey, I made this amount because I did this, and walk us through a deal that you've made recently, and why you went after that.
So I do a few. Some are smaller plays personally, and then some are. Can you hear me?
Yep.
Oh,
yeah,
my bad.
You kind of choppy, but we're gonna keep pushing.
Let me switch. Is that better?
I'm gonna mute my phone too. I think I got background too.
Nah, I was just gonna say I do a few. Some are fast plays for some quick money, and then some have been, like I told you, some long-term plays, which are really the dividend-focused stocks. I mean, I realize that a lot of the airlines. So when I'm focused on the short-term ones, because really even educated investors are losing money right now, right? So you're not really in a great, it's not really great information out there to go on to say, hey, this stock's going to do well right now. A lot of it is really guesswork to some degree. But I think that when you play it in strategically, you can still make money, right? So I bought Ford before one of their most recent drops, right? Because I knew that manufacturing was going to be hit. So I'm sorry, let me be more specific. I bought a put option on Ford, right? So I expected the price to go down, right? So I threw some money at it, and as the price was going down, I didn't wait until the strike price to sell. I sold it when it got close to it, because other investors who were also trading options wanted to get in, and I sold it for a profit. It was a quick $100. I only held it for a few days, right? I took that money, and then, like I said, I've been watching. I had a few things on my watch list from Fidelity that I set at the beginning of the year, and I watched for some of those things to get within either what I would say a 5-year range or a range that got me close to maybe what they dropped to in the last, the last crash or whatever else. And then once I felt comfortable getting in at a decent price, I jumped in. So I made a few dollars on JetBlue. I made a few dollars, like I said, on a few others, but mainly just focused on some dividend stocks that I've been holding.
Okay, that's good. Okay. Talk about, I got you on, anybody can chime in though too, but it's, I know you got a lot of knowledge here. So talk about making those quick moves, so someone in the chat now just said, hey, I heard bio stocks are uncertain. That's true. But I think if you go in with a strategy knowing that, like you did with Ford, you can make a quick profit, that's how you stay. It's not, you have to know what stocks you're going to play long and which ones you're going to, move quick on because it may be a little more volatile. How do you feel about that statement?
Yeah, so for me, I think most definitely. I think, you guys were talking about Tesla. Tesla is crazy volatile, right? And so it's one of those things that, it's one of those ones you might jump in, jump out 20 times. I mean, I had a few stocks like that. I mean, it was some AMD, some chip stocks that I've been playing for years where I jump in, I jump out, make a few dollars, it goes back down, I jump back in, right? And I think that it's one that I've been playing with for a while, Nokia. I expect that, being one of the major, well, it's not major right now, but one of the players in the 5G space that has really been overlooked for some time, right? And so I've been doubling down on that, making a few bucks here, jumping out, jumping back in, and yeah. So I mean, like I said, it's some that I know that I'll sit it out because of a nice dividend, and there's others that I'm like, all right, let me hold this right now, and I'm gonna drop it next week or next month. But I mean, I make sure on a daily basis that I have my my ticker set. So I get a text message, an email, on whatever else if I need to sell or I need to buy something that I've been looking at for a while. So I keep that consistent.
Nice. And what are you using? What are you using? For example, are you using Thinkorswim or the E-Trade to set your alerts and things?
So I mainly use Fidelity for my investments. But like I said, I've been playing with the options on Robinhood. Yeah, I think that's been. But I gotta, and it was just a few trades just to make some fun money on options. But I don't know if you guys have been watching the news with what's been going on with Robinhood, but with basically them being overloaded and their systems going down for an entire trading day and some other craziness. It's not the type of stuff that I want to have like large sums of money sitting in.
Nope. Okay. Question about money, right? We're gonna keep rocking. No one else has raised their hand in the chat, so
I need to go back on mute so folks can talk. I don't want to be the one. I don't want to be one taking on. But I see you, Derek. I see you, Jay. I see y'all.
Do you mind? Anybody mind? Okay, give me this last one. Give me this last one. Right. So if you're someone that comes in with $500 to invest, or say 1,000, right? Say you come in at 1,000, you got 5,000, and you got 10 or something like that, or maybe do 5, 1,000, and 5,000, right? What are the different strategies you think you go with something like that? Give me each level what you do, right? Because I think we have misconstrued about like what the market can do for you, not knowing that it takes money to make money. I'm kind of pushing you towards something, but tell me, based on those different entry points of investment, what are some things you think you would do or advise someone?
So is that a dollar price? You're saying $5 and then 500 and 1,000? Is that what you said?
Yeah, a 500, $1,000 and $5,000. $500, $1,000, and then $5,000. What are some of the different plays you do there? Walk me through those.
I think it really depends. I probably wouldn't, really wouldn't, say I would have just one strategy to approach it all, right? I mean, so, mainly when I talk, this is like, I consider it the play money. The money that I consider like, for like things that I would do for my retirement, that's mainly focused on ETFs. That's more diversified. That is not just U.S. markets, not just, a particular sector, whatever else. Those are things that, right, I'll stick to some ETFs that's been making, that's been doing well, and aggressive, right? Most of us have a lot more years in our career to go, right? But I think that when it comes to what I call my play money, I might take a little more risk, right? But I do also again have that dividend strategy as well on that side, because I like a few more dollars coming in throughout the month, so I know that if I'm going out to dinner or if I'm whatever else, I feel like, okay, well, that's paid for, right? Off of some of the money I made in the market. But I think that a lot of times when we come in with smaller amounts, we go straight for the penny stocks, hoping that something blows, right? Especially with folks thinking of biotech and y'all being in Dago, right? I mean, that's a big biotech sector right there. I mean, I remember picking up LPJC, which is like La Jolla Pharmaceuticals, and just hoping that was going to break. And then I was sitting at a tech conference, and then that bad boy did a reverse split on me, and then I thought I hit rich, right? And but it wasn't the case, right? So, but I say that to say that, yeah, you can make some quick money on on some penny stocks, but that's all speculative, right? If you really want to be serious about it, I think you really want to focus on some tickers that actually have something behind it, some sort of that their balance sheets look nice, or they have a plan to actually expand, or something that you've been reading about that sparked your eye, that you like, let me keep an eye on them, right? Have a strategy. Don't just throw money at something just because.
Okay.
All right, let me shut up, please.
He said, I'll leave you alone. Here we go. I got somebody raise their hand. Go ahead. I'm gonna unmute you here, Kyle.
All right. I have a question for like anybody here. Just what kind of what websites do y'all use, and B, more importantly, like more specifically, what kind of indicators do y'all usually follow when you're kind of analyzing a stock, if any? Just for an example, a lot of options training, they'll tell you to follow certain indicators, and it tends to be things like money flow, slow stochastics, MACD, those kind of things. So I was wondering, like, if anybody here has any experience in those kind of indicators, or anything y'all look at on how you kind of follow the flow of a stock.
Yeah. I always look at like price points. I'm like, okay, if the price is going to go down, I don't know, like $1 or $2, because then it's like, okay, how many shares do I want? So that's what I look at. Like, if I can invest like a good, extra $500, and I know I can get like a 2-for-1 deal on this stock, then yeah, I'm gonna go ahead and make that, make that trade. But I got to make sure that it hits that number, because if I don't, then I'm gonna get less shares. So I'm always looking at the price and always seeing like, okay, if I can make at least a 20% gain off this, I made more that way. So I do indicators like that. So I use E-Trade. I've been using E-Trade for years. I wish I was with Fidelity, but with my job, it got me with Fidelity. So I guess I can do it, but I just stuck with E-Trade. And yeah, they do. It is very expensive with how many trades that they do, like what, $6 per trade. So you know what I mean? Like, especially starting off, I had to be really strategic. Like, All right. And Jack would know this. I remember the first time when I traded, I just bought one Twitter stock. And the stock was, $16. You know what I mean? Like yo, and I'm paying it. And at the time, E-Trade was like almost $10 per trade. I mean, it shit was crazy. But anyways, so yeah, so I look at that. I look at the numbers. I always want to see like, okay, what, and then I always see where it's at. And okay, with the past year, what was its highest, what was its lowest, because if I'm like right in the middle, then it's like, okay, possibly I still have money to make, but if not, then I'm going to lose money too. So I always find stocks that are at least towards the, the bottom, but if not, in the middle. So as far as price points for the past year. So I look at all of that. And then as far as like research, so one of the things I always do, I just started doing, but I would highly encourage everybody to listen to CNBC. Like these guys, I mean, unless you're on the East Coast, like, hey, that's great. But, since we're on the West Coast, we got to wake up at like, 5 in the morning because, I mean, East Coast is already moving. So what I be doing is I just go to CNBC. They have an audio, so that's like free. So I just listen to them. And then to back up the audio, I just Google like, free CNBC, live stream. So that I can kind of see visually, what they're talking about. And so I just like to stay in tune because by the time it's on the West Coast, like 7, 8 in the morning, now all of a sudden the news has been broken out. Everything, just like this morning, they was talking about how the jobless claim, right? Like an extra 5 million people reported, unemployment. Now we're at freaking 21 million people. They say that's like 1 in 8 Americans that's jobless right now. You know what I mean? So when we look at those numbers and we do our research and just stay in tune with business and how the market is reacting to that stuff, I think that really goes a long way. And then going back to doing research, so with the cannabis, I really look at this website. It's called 420 Intel. And these guys, they don't just talk about Canada. They talk about the whole world, So then I'm reading news on that of what they're saying with how, people are making moves in that industry. So, yeah, I hope that answers some questions.
Absolutely. Thank you.
Yep.
Perfect. We got we got about maybe 10 minutes to go before we wrap up here.
I was gonna say something.
Yeah, what up, D-Mac? Go ahead.
Yeah, like what Jay is saying, CNBC, that's like the stock market version of ESPN. You see everything going on with there. So usually I wake up 6 in the morning for me, especially since I'm in the West Coast, because East Coast, that's 9 o'clock over there to me. But like since I'm over here, I always wake up at 6 in the morning, just turn on the TV and be like, all right, cool, stock market open. And then one thing I look at, I use E-Trade myself though, but at the same time, I'm using Yahoo Finance to look at what these stocks are doing, because it's like easier for me with that when I look at. And then when I look at a stock, I just first I want to Google it, do research on it first before I buy it, or if I consider buying it and stuff like that, and then see how's it going. And then I think Jay mentioned it before too. We look at like what it's been doing the previous year, where it opened up at, and where it closes at. So that also give me an indication. Okay, if the numbers seem pretty right, I may consider buying it. And then sometimes what I like to do, I already predict that it will go down low. So sometimes, like for example, like what I just bought today, like MGM and JetBlue, I already saw it like going down and stuff like that. But I already know that's all going to be temporary. But but the numbers were seeming pretty right. Even though I got paid the extra $6-7 fee for the E-Trade thing, but it's still, I feel that it's going to pay itself for me right there.
Okay, good looking. Thanks, D-Mac. Jack mentioned some here in the comments. Just looking around you. Kyle, I know you asked that for the group. I know you're a pretty smart guy yourself, but just for those listening, anybody else, I think looking around you, and that just really means like, look at the clothing, what type of cars people are driving, what are you reading about in the news? We're on Zoom call right now, right? There's a lot of good indicators if you just kind of look and just do your research. There's been plenty of times where I've seen something and I'm just like, I wonder if that's a publicly traded company, right? And just go look up their stock. And, you know, you find a lot of things. I mean, it's being a common stock investor is just buy stock in the product that you buy, right? Nike, Apple. I think that's a great start for people in general, right? Like, you know, what type of products do you buy and carry in your household? Go do your research. And then now you can see what the price point is. And now you see, for example, you may say, well, that's a little too rich for my blood. And you keep doing your research and you may see there's an ETF that you can get into, you know, for a lower price, right? So to answer Sherman's question earlier about ETFs and how they work, right? I think that's another reason or a way they can work. You may say, I really love Nike, or I really love Apple right now. I just can't afford it at, what is it, $500, $700 right now? So, but I can buy PWB, I think, which is an ETF that I've known about that carries, you know, Apple stock, and they have like a 20%, you know, volume of Apple stock, or 40% in their portfolio, and they're at $25 a share, right? So that happens too. So that, I think that's a good way for the common investor to get in if the charts seem like they're a little too much when you start off. I also say Investopedia. I like Investopedia. I just wish they had more of like a mobile friendly, you know, application. But I'm signed up to like their daily alerts. They give you definitions. You know, you can damn near look up any type of game on there, a virtual trader game. That's cool. Like, I wish they just had an app for it, but you can trade options in there. You can short stocks as well. I haven't gotten into the Thinker or Swim yet. I've been hearing about it, but as of right now, that I like Investopedia a lot. It sucks because they're not mobile friendly though. So I'll wrap it up. I'll give my like 500, 1,000, 5,000. And I guess I'll give it in terms of like, I guess it just depends on what type of investor you are that Jack was saying. You know, are you risk adverse or not, right? Because that's going to determine how much of your money you want to lose or gain, right? How quick, that's what you have to really ask yourself. How quickly do you want to lose your money sometimes, or, you know, be comfortable losing your money? So, Jack, you chiming in or? Okay.
I'm sorry. I didn't even know I wasn't on mute. My bad.
Oh, okay. I'm like, you chiming in? I see some news. But
no.
You listening? Okay. But, you know, so for example, if I come in with $500 and I'm someone that's really aggressive and you know, I really want to flip that, you know, I think that's a price point that people want to flip, right? You want to see 500 turn to 1,000 quicker than you want to see. It's sexier than 500 turned into 600, right? Or 700. That in at 5. That's if you're, you know, knowledgeable about options. Options is a good way to really increase your money and your profits, but it's a tough game to master. I'm sure Kyle knows. I've gotten my ass handed to me on options. But, you know, so if you're somebody, but do your research before that, right? If you go and get into options, and, you know, it's a way to double up. If you're more, you know, if you're trying to be, you know, less risk averse, I would say you would look into ETFs and things like that, and you start with your $500, diversify your money and get a really good idea of how the market moves, right? If you're just starting out and you have $500 and you pick a product that you like, or a few products, and you realize, okay, well, out of that $500, I can only buy 3 shares, right? of some stock that I like. So now you maybe say, you know what, I'm actually going to buy, you know, I'm going to buy 20 shares now of an ETF, and it'll give me a good, and it also has Amazon, and it also has Home Depot and these things. So you can kind of get an idea of how some of our main companies move, or an industry moves. I say with 1,000, I would probably go directly for some stocks that I felt like were at maybe a price point, maybe like $100. I would try and target a lot of stocks that I think can maybe get over that $100 price per share. And just like with penny stocks too, you know, once you get over that dollar, you know, it starts to grow. I think that's the thing with penny stocks. They stay below that penny, you know, that dollar threshold. I remember doing some research, but the goal is you want to get in before it's over $1, and then you can really, you know, ride it to $1, $2. It's easier to go from, you know, it goes up quicker. And then 5,000, I would say, you know, maybe you just start buying out, you know, if you're comfortable. And a lot of times you got 5,000 doesn't mean much. If you're someone like that, you may say, well, I'm just going to go straight into like an Amazon. I may go straight into Google and just take those, you know, $100 returns, you know, every month or so. But, you know, because that's what they've been giving you for the most part, you know. So it takes money to make money. And once you start to have more money to invest, you can be less risky and still make good money, right? That's just kind of it's just like any investing. If you go into real estate, you're going to make a lot more money on a $1 million, you know, property that you bought than you're going to make on a $200,000 property. So, yeah. So, yeah, there you go, D-Mac. Scare money don't make no money. Yeah. It's like gambling, right? It's like going to put up what you're willing to lose, right? So
yeah. I mean, the way I see it, it's like going to Caliente, put a bet on your favorite team or whatever. So that's what I see it as. So I mean, only different is you got more resources to say, okay, say like your stock is like your team. Okay, I know this team's going to win right here because of such and such. Like I know they got this thing going on right here. So that's what I see it as.
Yeah, definitely. And then once you start making that money, you reinvest, right? You know, maybe with that 5,000, say like for me personally, yeah, that's why I would maybe go right into Apple, Google, some of the big companies I know that are they just dominate the world, right? The market. You don't hear anything about Google going down or Amazon going down, right? So you know you're always going to make some money into that. And then now you take those hundreds of dollars and then you take that and reinvest into some other things, you know, some options. You maybe take 100 or 200 of that and say, I'm gonna go play with some options, or I'm going to, you know, diversify over here, start shorting stocks, doing different things like that as well. So I'll leave this last. So here's some helpful websites. Thanks, Kyle. Big Charts, Trading View, Bar Charts, FinViz, and Stock Charts. So you can Google all those, Kyle. Those are all websites you can Google.
Yes, sir. Every single one of those is its own website. Helps with different aspects of trading. Some have indicators. Some are FinViz. I think everyone should check out. It breaks down like the industry into a map, and you can just see different industries across the board. And a lot of ETFs will group up whole industries, right? So you can start seeing a lot of what an ETF might hold in there. So a lot of these are very helpful when you're looking at different companies, different industries, and different bags in general. Okay, good deal. All right, well, we're about done here. I appreciate you guys joining the call. You know, we'll try and do this every 2 weeks or so. We'll try and shoot for Thursday and just kind of catch up on the market and see where people are at with their plays. I know last time we talked, Jay, it was what stocks were we talking about? You had your cannabis. I think we were looking at the travel, you know, airlines, Carnival, some of the cruise lines. We talked about that. You know, this time obviously we talked about biosciences. We touched on a few. So if you guys, you know, next time want to join the group here, anybody else, let us know. And bring some stocks to talk about, right? And share some information and knowledge. So thank you everybody for your time and stay healthy out there. I'm glad everybody's social distancing. And our NSBE Entrepreneurship Virtual First Tuesday. Jay, you wanna wrap that up right there?
Yeah. So our next First Tuesday is going to be on Cinco de Mayo. So that is, anybody knows when that is? Yeah, that's the 5th of May. Yeah, so tune in for that. More details to come. And I really look forward. And more likely it will be on a Zoom just like this. For those, I don't know, show of faces. Who was at the Virtual Tuesday last, what was it, this month? Okay, we got a couple of hands. Yep. Yeah. So we're definitely going to be doing that again, you know, while we're all quarantining ourselves. And it's going to be a great time to socialize virtually and tune into what we got in store. So can't wait to see y'all then.
All right, man. Thank you, everybody. Have a good, safe night. Enjoy yourselves and all that. And thanks, everybody, for joining and checking it out. Good luck out there.
Yeah, thank you. Appreciate it.
All right.
Thank you.
All right, thank you.
All right, I'm stopping the live stream. The live stream is stopped. Yeah, for real. Good job, guys. Good job. Good conversation.
Yeah.
Yeah. We all got something to learn and share and all that. So, here we go. So yeah, maybe we'll try and shoot and do this every couple of weeks. So like I said, if you guys want to stay in tune, I know Jayton hit y'all, most of y'all up. You guys know me too, whatever. We can run it just like this and just talk about different stocks and goals and stuff like that. So.
Cool.
All right, man. I'm about to go make me some dinner. Finish drinking my whiskey. All right, y'all.
Man.
All right. Stop.
All right.
Yeah.